I want to introduce one of the best indicators ever created on TradingView platform. You're gonna learn a very accurate trading strategy based on this indicator, so make sure you watch this video until the end and let's get started. Before I add the indicator, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, to add this amazing indicator to our chart, here we click on indicators and we search range oscillator, this one, which is an editor's picks indicator and written by Zierman. Alright, this is the indicator, and as you can see, it's added here below the chart. At first, you may think that this is similar to other oscillators like RSI, but this is different, and with high degree of accuracy, it will help you to find trends, reversals, breakouts, evaluate momentum, and divergences. I will teach you how you can interpret and use this indicator for trading, and then I will teach you a trend following strategy based on this indicator that helps you to find accurate buy-sell signals in the market. Alright, as you can see, we have a line here that is moving above and below the center line, which is set at 0. This line shows how far the price is above or below its balance range. So here, unlike other oscillators that rely on overbought and oversold thresholds, this indicator uses an adaptive range detection based on ATR to show when the price is trading within a volatility adjusted band. We have two important levels here, which are 100 and minus 100, which I explain later what signals are provided by crossing above 100 or below minus 100. And depending on the position of line on each of these zones, the line can have different colors. When the line is bright green, like here in this part, which is actually when the line is above 100, it shows a strong bullish momentum in the market. When the line is muted green, like here or here in this part, which is actually when the line is between 0 and 100, this shows weak bullish momentum in the market. In times that the line is blue, like here or here in this part, which is actually when the price is crossing the center line, it shows uncertainty in the market and a trend shift. Usually a reversal happens after them. For example, here the market was in an uptrend, and here at this point the line was crossing below the center line and it became blue, as you can see, and then we got a reversal and the market turned to a downtrend. Now the line is below the center line. When the color is muted red, like here in this part, which is actually when the line is between 0 and minus 100, this shows weak bearish momentum in the market. But when the line becomes bright red, which is when the line is below minus 100, this shows a strong downside momentum in the market. So by looking at the color of the line at any given time, you will have a quick evaluation on the current situation of momentum in the market. Alright, now let me show how you can track the line and interpret when it is crossing into different zones. First of all, we have a center line here which is set at 0, and crossing of the line below the center line or above the center line is an important signal that you should pay attention to it. When the line crosses above the center line and stays above the center line, this shows a bullish trend in the market. And when the line crosses below the center line and it stays below 0, this shows a bearish trend in the market. So in times that the line is above the center line, the price is in an uptrend, and when the line is below the center line, the price is in a downtrend. You may ask if the center line crossover of the line can be considered as buy-sell signals or not. It can be, but if you have also reversal signals from other indicators or aspects of technical analysis, for example, if the line crossed below the center line or on the other hand the line crossed above the center line, we don't rely only on this as buy signal or here as sell signal. The signal is confirmed only if we have also other reversal signals that show that the market is turning to a downtrend or to an uptrend. Regarding the center line, the best use case of this indicator is trend identification, not buy-sell signals. This means that we don't focus on center line crossovers as buy-sell signals, but we focus on the position of the line regarding the center line for trend identification, and then we find buy-sell signals by the help of another indicator. For example, when the line is above the center line, we say that the market is in an uptrend, and then by the help of another indicator, we look for long position opportunities. Later, I will show a trading strategy like this, so make sure you won't miss it because it is a very accurate trading strategy. Alright, as I mentioned earlier, 100 and minus 100 are also important levels in this indicator. When the price breaks above 100 or on the other hand below minus 100, this tells us that the price is exceeding the normal volatility range, and this is usually a signal for a potential breakout or exhaustion extremes, which are the sudden extreme movement of the price that usually happen at the final stage of trends, but most of the time it is related to breakouts, and after them we have an extended movement of the price in that direction. For example, here you can see that the line crossed above 100, and when we check the price action, we can clearly see that at this level we have resistance. Actually, in this time period, the price is in a trading range, as you can see. As I said, when the line crosses above 100, it shows high volatility and a potential signal for breakout, and you can see that after that the price went out of the range and we had an advancing of the price, an extended advancing of the price, as you can see. As I explained earlier, during the time that the line is above 100, the color is bright green, and this shows a strong upside momentum in the market. Similarly, when the line crosses below minus 100, this is a potential signal for a breakout because this shows increased volatility exceeding the normal range. In this case, when we check the price action, we can see that we have a support level here, and here when the line is closed below minus 100, this is actually when the support level is broken, and you can see that we had decline of the price after that. During the time that we have the line below minus 100, the color is bright red, and this shows a strong downside momentum in the market. The crossing of this line below minus 100, or on the other hand above 100, when it is mixed with price action analysis, it can effectively help you to find breakout signals in the market. By the way, if you're interested to learn price action analysis, recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description, and you can get it later if you want to master price action trading. Alright, now let me teach you a trading strategy based on this indicator. It's a trend following strategy, so we're gonna identify the current trend of the market, and then we're gonna find buy sell signals in the same direction with the current trend of the market. We're gonna use this indicator for trend identification, and we're gonna add another indicator for buy sell signals. So here we click on indicators and we search stochastic, this one, which is a built-in indicator on TradingView platform, and we need to change its settings. So here we go to the settings of the indicator, and here for K% length we set it at 7, and for K% smoothing we set it at 3, and for D% smoothing 3 is okay. Alright, we're done with the settings of the stochastic oscillator, and now let me show how we can find buy sell signals based on this setup. As I explained earlier, when this line is above the center line, the market is in an uptrend and we should look for long position opportunities, and we use the stochastic oscillator to find buy sell signals in this uptrend. We wait for the times that the K% line, the blue line, goes below the center line. This shows that probably a pullback is forming on the chart. In the next step, we wait for the K% line, the blue line, to cross above the D% line, this orange line. When the blue line is closed above the orange line, the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the pullback and profit target at 1.5 risk to reward ratio. Alright, after this trade, again you can see that here the K% line went below the center line, but this time it just kept declining and went below 20. This is a better situation than this situation because this shows oversold, and this oversold is happening while the market is in an uptrend. Here in this situation we have higher probability for the price to turn up. So between these two setups, this one is better and has higher probability. In the next step, we wait wait for the K% line to cross above the D% line. You can see that it is closed above the D% line here. So the buy signal is confirmed, and in practice we could enter a long position at this point with the stop loss below the pullback and profit target at 1.5 risk to reward ratio. Again, here you can see that the K% line went below the center line and then it is closed above the D% line here at this point. So the buy signal is confirmed, and in practice we could enter a long position at this point when the new candle was opened. The stop loss below the pullback and profit target at 1.5 risk to reward ratio. Here you can see that K% line went below the center line and then below 20, but by the time that it is closed above the D% line, here you can see that the line turned to red. From here the line is below the center line. So from here we assume that the market is in a downtrend and we should look for short position opportunities. Here in stochastic oscillator we wait for the K% line to go above the center line. In this case you can see that it went above 80. As I explained earlier, this is a better setup in compared to this one, for example, where the K% line is only above the center line, because this situation shows overbought in a downtrend, and here there is high probability for the price to turn down. We wait for the K% line to close below the D% line. You can see that it happened here. So the sell signal here is confirmed, and in practice we could enter a short position at this point with the stop loss above the pullback and profit target at 1.5 risk to reward ratio. Another trading opportunity we had here where the K% line went above the center line and then it is closed below the D% line here at this point. So in practice we could enter a short position here with the stop loss above the pullback and profit target at 1.5 risk to reward ratio. Please pay attention that although this trading strategy is very accurate, but it doesn't mean you will not encounter false signals. No, losing positions are always part of the game and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a consistent profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.